Market Technicals morning call video for Monday, June the 3rd. Hope everybody enjoyed their weekend. Nice weekend here, very, very hot in the East Coast. I know there were a lot of storms. Those of you out in the Midwest, hope you fared well with the storms out there. Crazy stuff happening weather-wise. All right, anyway, back to the markets. Interesting developments happening on Friday. At the end of the day, the last about 20 minutes or so, markets really sold off. We had a big sell-in balance come into the markets, and they really got hit pretty hard. That was giving up all of its gains from Friday. We had actually pretty much of a solid grind higher on Friday, which was really to be expected. And having end of the day, end of the month, usually you get a little bit of window dressing. A lot of these bigger firms defending their positions, marking up their positions, their book actually, going into June. So it was pretty surprising to see market really selling off the last half hour, 20 minutes of the day. So anyway, real quick across the board, look at the our performance chart here. We have pretty much losses, minimal losses though, 1% or less in our major indexes, Dow Jones, S&P, NASDAQ, and the Russell. Then if you come down here, we had some solid gains in the semiconductors, utilities, and the dividend stocks are really continually getting hit. We have rising in bond yields, so they're getting kind of hit here. Banks did well, financial did okay, brokers as well. And home builders, again, that financially sensitive sector getting hit. Biotech's up, drugs, healthcare down 2%. Then come down to the area, we have some precious metals. All mixed bag here, but the gold miners did really, really well, as you can see, up 7%. And then copper continues to lag the markets. So we do have a little bit of a mixed picture. We have volatility picking up at these higher levels. I do have a lot to show you as far as indicators and charts, because on Mondays I like to show more of the big picture of what's going on. But I would be concerned if I was a bull. I do see volatility picking up. I see that sell-off coming in on Friday. That doesn't mean we're going to go straight down. If anything, I'd like to see a little bit of a 1 or 2 day dead cat bounce into certain levels, which I'll show you, and that'll be a great shorting opportunity in the market. And then possibly breaking some key support levels would at least put a tradable top in. And that's what I'm really looking at for now. I do see volatility coming in this summer, which is really refreshing, because the last couple of summers we had really no volatility and just really of a dead market, just kind of going back and forth and sideways. So it'll be really interesting to see what happens. And I do think that this week it will probably really put a line in the sand if we're going to really trade higher, or if we're going to actually start grinding lower and again having that top in place. So we'll see. There's a lot of economic data coming, so really make sure you you check the earnings calendar excuse me, and an economic calendar. More importantly, big numbers. We have PMI coming out. China came out with their PMI, mixed bag, but again, just keep an eye on your economic calendar because that's going to play an important role, probably set the trend for the day as well. And you want to really kind of look and see what how's the trend coming in our numbers. Are we missing expectations? Are we beating numbers? So that's something really to keep an eye on this week as well. Okay, so let's get right into it, because there's a lot of stuff to show you. And what I want to do is let's start looking at our at our indicators. We have our McClellan oscillator really now down at oversold territory, down at 81 after that sell-off on Friday. So 81 would really be a spot here. So if we start to break down even lower, I would be looking for at least that little dead cat bounce. excuse me, that we had basically on Friday, which we had that little pop on Friday morning. So we want to look for, be cautious of a bounce. I wouldn't be looking to short the market here as well. We're down here at these levels, and we're outside the Bollinger Band. So every time we're outside the Bollinger Band, especially here, we get a little bit of a big pop. So I'm looking for next to position myself short on the next failure up into this area here, 50, 30, 40, and I'll show you that'll coincide nicely with the S&P with some of these levels I'm going to show you. So, but again, oversold, so looking for some sort of a dead cat bounce. Now, let's take a look at new lows, new highs. As you can see here, we have these spikes. So this is interesting that we have new lows, New York Stock Exchange new lows increasing, where we really haven't had much of a pullback other than Friday, the last half hour. So that's telling me that, again, the ETFs are moving higher and now we have our stocks starting to move lower, just starting to. So really, we had a grind up in the ETFs, and stocks really weren't going anywhere up until just recently on the spike up on Friday. So we have an increasing of new lows. So we want to really be cautious here. As you can see, that we're just starting to move lower. So even if we bounce back up again and we pop in here, look at what's happening. This is the area that we don't want. We want to stay within below 50 actually. Anywhere below 50 is actually a safe number of new lows coming in, and the markets can continue to grind higher. But when you have these spikes come up above 50, 60, okay, that's really a tell sign to be careful, use caution here, okay? Now, obviously, these big spikes up really produce some good buy signals here, as you can see here, here, and here. But we're not even close to that yet. So we get a little bit, I think we're going to probably chop around above 50, 60, and then start to really move and increase higher as the markets move lower, okay? Now, let's take a look at the new highs, new lows. And as you can see here, I expanded the chart. We've been above since 2011, actually longer than that, but I just wanted to get this main point in. We're above zero here. Now, if we start to break below zero and hold below zero, that's a negative action here in the new highs, new lows. So this is something that we really want to keep abreast on what's happening here, right? This is something we really want to watch. Again, indicators are lagging the price, but they will give us some sort of an idea or hint of where possibly this market may be headed. So we're back into these areas again. Now watch, because we start breaking down here, and we start really breaking down to these new lows and break below 100, break below zero even, and hold below zero. That's negative price action here, and that's something that we want to use caution and want to keep an eye on. Okay, let's take a look at our stocks above a 50-day moving average. And remember, when I mentioned that price is moving and our stocks weren't moving, now we're starting to break down again. Okay, this is the S&P above 50. We're at 93%. Now we're back down below 60. And I remember I said a week and a half ago, I said the S&P stocks above the 50 actually produced a sell signal, and stocks above the 200 did the same. And then I also mentioned keep an eye on the bullish percent, because the bullish percent also made a sell signal here. That was back about a week and a half ago. So our indicators are now rolling over, and as you can see, price is starting to play catch up as well. And usually, again, price leads our indicators, but when you have stocks that are not really performing like the indexes are, that's going to give you a little bit of indication that markets are starting to roll over. Okay, let's take a look at the New York Stock Exchange Summation Index. Weekly, as you know, we have got a sell signal here last week, confirmed now with our second week, so we are now on a sell signal on the New York Stock Exchange Summation Index. Now, our NASDAQ, we are not quite there yet. We are still on a buy signal, so we have a little bit of mixed signals there from NASDAQ to New York Stock Exchange. Okay, let's take a look at the advanced decline. This is actually NYAD, New York Advanced Decline, very important indicator. Now we are below zero. Now if you notice that on this move up, we've been really pretty much above zero. Now we're starting to stay below zero here. So advanced decline now breaking down, something again telling us that, hey, we have to use caution. Now guys, we all know that indicators and red flags have been upon us all through 2013, and price did not really confirm, really ignored it, and just moved higher. Now when you have Bernanke speaking that we might be pulling in the reins a little bit because the economy's heating up, doing well, that's a big catalyst for the markets to actually start taking shape and starting to lose its luster here. And when you have price action like this, choppy price action, bigger candles at the top, and you have extreme bullish sentiment, you have to use caution. You've got to, this can't be ignored, let's put it to you that way. Here's the tick, again, below zero. We want to use caution. This is the end of day tick, okay? Now we talked about I use tick intraday for my trading, especially also end of day is also a very good point that you want to watch as well. And as you can see here, we're below zero, but when we start breaking below zero, we're above zero, we start breaking below zero and start holding below zero, that's also bearish price action. That's something that we want to continue to monitor this week, okay? Now, let's take a look at the foreign markets, and I show you this chart all the time. Breaking down, China breaking down here, guys. This is not good, and even though we have markets continue to ignore, eventually you're just not going to be able to ignore it anymore. And emerging markets, I showed you this before many times. I show you this every week, breaking down. Obviously, strong dollar is not going to help that. It's also heavily commodity weighted. But these emerging markets are breaking down, guys. Here we go, 40.50. Big line in the sand here, 40.50. Below 40.50, we're going to get a big flush here. And that's not going to be ignored by these big fund managers. That I can tell you. Copper, while we're on to the subject, little pennant here. Now, we did not get a breakdown, but if copper starts to break down again and really starts taking out this 305 area, again, that's going to be a wake-up call to the bulls. I'm just telling you, this is not looking too good here. Now, things could change. We could break down and then literally just whoop right back up again. We are longer term looking really, really great here in this market, but in the shorter term, I would use caution. And speaking of that, it looks like everybody's talking about the yields now. Here's the 10-year, 2.16%. We closed basically flat here, I think up 3 ticks. So watch. I do think that this is a bottom in yields. I think yields will rise from here. Of course, nothing in a straight line, but if you're looking to refi, do it now because I don't think it's going to just go skyrocketing up, but I do think yields have bottomed, and I think right in this area here, June, July market, the Treasury yields have bottomed, and I think we're going higher. And let's take a look at the USB. We have a confirmation of a head and shoulders breakdown. Again, we could now bear flag into this area, so that doesn't mean that we're going to go straight down, but we could bear flag into this area and then we start to break lower again. Take a look at our sentiment, our VIX. So we had a black flag, a black candle, excuse me, closed outside of Bollinger Band. We came in here, and let me just show you this area. We came in here and we actually got our confirmation that we are headed higher, meaning equity markets. Now, we needed Friday to really break down from this candle. We did not get that, so now we're back outside the band. Okay, so now we have to really see what happens in the next couple of days. But volatility picking up, fear coming into the markets, and if you look at the CBOE, the put-call ratio, again, 119 bearish close. So that's telling us fear is starting to creep back into the markets here, guys. So really use caution, especially for the swing trader and the longer term, position trader, or even the long-term investor. I would definitely be tightening up stops if you're not looking to buy protection. Okay, but protection is still cheap, so I would really consider that if you really want to look through and ride this hiccup up in the markets. I do think that markets do go higher. After we get a little bit, at least a substantial pullback, markets do look pretty good in the longer term. Okay, real quick, let's run through the indexes. 1680 was our top. We had 1635 here, broke down. We did close below it. Let's see what happens. Usually we take back about 50% of that candle. So 1640, 1645, which is right up the 20-day moving average. Really don't want to go too far above it. If we want the bearish trend to continue, okay? Next logical target will be the 1600 area of support. Coincides really nicely with the 50-day moving average and this lower trend line area here, as you can see. So that's going to really coincide nicely. So 1600 would be the next target area of the S&P cash. We broke down on this pennant. We broke the 20-day moving average. So logical area, again, would be this area here. And look at this little horizontal area of support of 159.75, nicely with the 50-day and the lower trend line here. So 159.75 would be our next target. But again, guys, nothing goes down straight. Next, dead cat bounce would really be a great spot to position yourself short for that move lower. Okay, and this is a 30-minute chart. Here's one I wanted to show you, that 163.88, 163.75. We broke low, we did close. And as you can see here, this was really the last 30 minutes of selling. We did start to gradually move lower. So even like the last hour, we really started selling off here. But let me show you the 15-minute chart. As you can see here, this is a 15-minute candle. You see where the big selling came in. Last 15, 20 minutes, we just really literally broke down really hard here. Okay, so big move, big distribution day. This is something that you can't be ignored, though. So we have big selling balance come into the markets. Diamond, same thing. Nice pennant, broke down, broke below 20. You can see the theme remains the same throughout all of these key sectors here. Market did break down. And again, it was really the last, even if you call it the last hour, But the last 15 minutes was really, really fierce. Really started breaking down really hard here when they posted the sell-in balances at 345. So logical target would be this upper trend line, this long-term upper trend line, and then we would obviously reevaluate it. And here's what I showed you on Friday morning: head and shoulders pattern. Be careful. We closed right down to it, literally right within 5 cents. We closed 112.35. We're at it now. A break today and close lower would confirm this little head and shoulders pattern. And again, usually when you break a head and shoulders pattern, you usually back test it with a bear flag and then break lower. So what I like to do is let it break, and then the next back test into the neckline would be a short position, okay? But this is not good when you have a leader breaking down here, okay? And all of the key sectors also breaking down. All right, here's the Russell IWM bear flag here, and now that is one of our leaders as well, stronger of the 5 that we follow, because we're above the 20-day moving average. But again, guys, bear flag here. Watch this to break down as well. If they all break down, IWMs will break down lower as well. Goldman Sachs did break. But again, holding up well, holding above, way above the 8 and way well above the 20-day moving average. So right now, banks are holding well, again, because yields are rising, good for the bank sector. Okay, XLF, same thing, just wanted to show you what it looked like. And then, of course, we have our Apple. Apple really held up fantastic, I'll be honest with you. And Apple's doing quite well. And we do have this inverted head and shoulders, and we do have the head and shoulders pattern as well. I think that the inverted head and shoulders will probably play out before the head and shoulders pattern, only because we are at a bottoming here, and it looks like it's starting to bottom in this bottoming process here. So again, a break above 470 is really a key area for this inverted head and shoulders to really start to pan out here. Okay, so we'll just keep an eye on Apple here, but I think Apple's still a trading stock. I think you get one big nasty sell-off between now and the end of the summer, and that's when you're cue to be really looking to buy Apple and build a position in Apple below 400 or even at the 400 area. Qs, lastly, is the Qs. Just wanted to show you Apple held up well. Qs is going to hold up as well, heavily weighted in that index. All right, guys. Watch that watch the economic calendar. It's really important. You're going to have a lot of economic data coming out. It's going to be interesting to see how that trend is going to develop. I think that's going to really set the tone for this market. Are we going to head higher? Is it just a hiccup and people are going to buy the dips? Or are we going to have a tradable top in place and we are going to move lower looking for that correction? So that's going to be the key for this week, and we'll position ourselves accordingly. Have a great day. We'll speak to you tomorrow. Take care.